Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. The website and this video are for educational purposes only, and nothing stated at either this video or in the website is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial pro. I'm just a guy that draws lines on charts. So let's take a look. Okay, this chart that we're looking at is a 10-minute chart, and it looks a little different than the one we did yesterday because I have identified what I think with today's action, where I believe we have a channel. Okay, we'll take a look at the longer range in just a second. You'll remember that last week we were looking at the possibility that that these bottoms might line up here, that we might get a bounce, and we sure did. Right there on the first trading day of 2012. Now, what is different in this chart is I have abandoned this low back here on the 19th as the starting place for this channel. And that actually seems to happen fairly often, where you'll just kind of instinctively you'll go, well, my channel needs to start here, and then all of a sudden you end up with this situation where nothing's lining up, and the reason is that that's not the channel, and we see this in off of bottom formations sometime, where again I think it's just something you have to get used to. I don't think it's wrong to start with this point down here, because clearly that's a technically important level. But this is about maybe the third or fourth time I can easily recall where the market's gapped up and then just ignored this bottom area that we had here late on the 19th of December. They gap up and then they just finally establish their channel. So what was the giveaway today? Well, the giveaway was just this bounce. Again, where did that bounce take place? It took place on the neckline of our inverted head and shoulders here. It's better on a 1-hour chart. There it is, left shoulder, head, right shoulder. This is looking like a head and shoulder, an inverted head and shoulders now. If you're along the market, I would still have stops around this neckline. If you're in an ETF or an index fund of some type, but that's what it's what it's looking like right now. And if we line these bottoms up here, counting that bounce we got today, and then we kind of do a parallel line, which isn't exactly parallel, but pretty darn close, you can see that, well, this top and this top kind of line up too. So all of this leads me to the general idea that that we are going to head up to likely test that 1300, low 1300s range, but still one more obstacle. And what would that be? That would be this pesky neckline from the head and shoulders top. That here's that pattern right here. Left shoulder, head, right shoulder, and that line moved around on me again. Ignore that move. That is where the line is, just under 1270. Excuse me, right at about 1280. The lighter purple line. And here's another little thing. It looked like we had this small series of tops right here over the past 1, 2, 3 little rallies that came up. They all lined up pretty nicely. When the market bounced this morning, you could see, if we look at it on a 3-minute chart, you could see after the market bounced this morning, It kind of bunched up here around that line like this line was going to act as resistance again, but then it busted up over it. And however, we ended the day almost exactly on that 1280-ish, very low 1280s neckline that is extended from that head and shoulders top. So that's a little bit of a caveat. And what I think will happen if we get up over that line, and what I would say is this: if we can get up over the highs of the third, which was roughly 1284 and change, and that's only, 3.5 points from where the market closed, then I believe this market should rally on up to a touch on this top red line at some point. And if it does that, then we get to see if it's got the strength to take out this rising line right here. What is this line? Well, let's back up again. That red line I just pointed out is the line that was the neckline underneath this sort of a complex head and shoulders right here. Or we might call this we were also calling this a triangle. And this pattern, by the way, pretty much made its minimum target. So this is not a failed pattern right here. This pattern missed by maybe 2.5, 3 points in the S&P of making its minimum target. If this inverted head and shoulders plays out as they typically do, then we are looking for a move. I'm going to have to move this here. We're looking for a move up to about 1380 as a target from this pattern. But like I said yesterday, this is going to be very interesting because I do think there's some important resistance levels that are going to have to be breached before that 1380 can be made. And if they are breached, then I think you have to look at it and be open to the idea that 1380, while it's a minimum, may not be all that's ahead. And the reason is this red line right here that's right now right in the 1332, 1333 area. This red line, there I'm highlighting it. Again, if we back up to a weekly chart, you can see that red line is drawn across the 2007 fall highs, which actually were the all-time high in the S&P, and also the spring 2011 highs. So, you would look at that line and you would think, wow, that should really be strong resistance, and I'm expecting it to be resistance. But if this market gets over that, folks, that line likely becomes support. So I just, got to point that out. As bearish as a lot of this stuff has been looking here, there is as strong a bullish case at this point that this chart could be setting up a bullish move. There's just as much possibility of that as there is for a bearish move. And I'm just looking at the chart here. I'm not looking at the news in Europe. I'm not looking at what's going on fundamentally. I'm just looking at the price action in the chart. If the market gets up over this red line and this inverse head and shoulders that we just came out of says it should, then this market appears to be poised to potentially get up and retest these highs. So I think you need to be open to all possibilities. I'm trying to keep an open mind. And I think one thing that will really help is if we just keep watching these channels, just keep an eye on the day-to-day action, look at different time frames, because let me tell you something. A bold bullish move or a bold bearish move. And at this point, it could be either. Okay? But a big move cannot happen without there being small steps along the way that kind of act as the breadcrumbs that we follow as the market unfolds. You may remember this. I don't know if you do or not, but I was doing some videos on the Russell back, probably last winter and spring. And the Russell was just chugging along up this perfect little channel, and each time it stopped and paused, it just tipped its hand. It said, here's what I'm doing. We're doing a little triangle here. We're going to hit the bottom of that channel, and we're going to pop up again. Then we're going to go sideways. Look, here's another little area. It was like somebody walking upstairs. There was a step, then it would go sideways. Then there was a step, it would go sideways. It was such an easy thing to follow. Now, since the markets have gotten into this kind of volatility, it's been a good bit tougher. But clearly you can see that that this line served as support today, as it should. Additionally, it appears that we have now a channel that is just 3 days old that has formed off of that big gap up. Well, not a huge gap up, but a pretty good sized gap up that was back before Christmas, that took us out of this downward trend, and then we had this gap up today, and all of these things now appear to be showing themselves as yet another channel. Now, sometimes these gaps make it tough. Here we had this huge gap back here, this big gap here. What's kind of interesting too is if you look at the rate of descent and then the rate of ascent, and then we get a little bit less descent and a little bit less ascent. I think that's kind of typical of a short-term bottom, that it slams down hard and then it bounces back hard. Then you can see that some of that volatility started to get worked out of the market. Hopefully, we'll get a little bit more worked out, and eventually the market will establish a little bit clearer trend instead of getting into all this kind of consolidation stuff. Let me show you one more thing. Looking at a 2-hour chart, I just want to show you that it looks like we maybe want to keep our eyes on this bottom green line and this top green line as well. Because so far, after the big fall out of that head and shoulders top, this whole move back up has been constrained by this line and this line. There's also this midpoint line, roughly midpoint, not exactly, but this rough midpoint line, and by the way, we might move that a little bit just to make it line up a little nicer with this top. But that midpoint line will probably also be serving as some resistance if we hit that. But let's just see what happens, guys. Here, inverse head and shoulders, breakout, little pullback. If we have continued strength and trudge on up to over 1,300, then I think eventually we will probably wind our way up. If we can get over this line right here, again, that's going to be the interesting thing. But this pattern has a target of 1380. We got to call it for what it is, and let's just see how it develops over the next day and weeks. And again, I appreciate you tuning in to watch this video, and I especially appreciate those who subscribe. If you're not a subscriber, it's easy and it's inexpensive. It's $19.95 a month, and you can sign up. Everyone who signs up, whether it's for a month or a year, gets a 2-week trial for $4.95. Once you get that going at $19.95 a month, that's less than a cheap cup of coffee per day. And that trial, you get 2 weeks for about the price of a tall, or rather a grande caramel macchiato at Starbucks. So think about it. I appreciate it. And let's see what happens tomorrow.